Alan Nuckman of Agora Financial joins us now for the weekly options alert. And what's your take on the market? What's your trader talk today?
Profit-taking pullback. We had 12 S&P records in the month of January alone. We needed a pause. That's what this is right now. The Dow's 500 points off its highs, and the S&P is 50 off that tip top. But we've got a lot more upside potential left.
Tracking your trades, Apple getting hurt.
Yeah, Apple got us. That option expired worthless on us. That stock went up to 180, made new all-time highs, but didn't follow through, went straight down after that.
Freeport-McMoRan still on your list, especially as an infrastructure play?
Yeah, it's February 9th, $18 call. Now, if we get back up to 20, then that target's 22, and then 24. We did buy an extra week of time there, so there are 10 days till expiration, so plenty of time for this to perform.
This week, your WPI trade trigger is Bristol Myers, BMY.
Yeah, healthcare was hot, up 10% in January before a bit of a pullback. So we saw the smart money piling into this stock. So we're looking at this $62 call for February 16th. So that gives us 2.5 weeks of time, an extra week, because that volatility was low at the time that we purchased this option. So if we can get a push above 64, then that target's 68 on the upside in BMY.
In your trading floor takeaways today, the VIXPLOSION leads the way. So the VIX is starting to equal opportunity for you.
Yes, the VIX popped up to its highest level since August. As I always say, you need the markets to move. So volatility is opportunity. Now what's interesting, we've been talking about how it had not been making new lows even though the market was making new highs. So something was amiss in the short term. And the VIX is actually up 30% year to date, which is interesting considering the market had just made all-time highs.
Number two, the bonds bomb.
Yeah, that was big news. No, we've been in a decade plus bond bull where we've seen the bond price go up and yields go down. Now it looks like we may be having a turn here. The 3% level on the 10-year note is a psychological pivot. Let's keep an eye on that, but we have rallied to 3-year highs in rates, and that's got the markets a little bit spooked.
And in your book, Alan, it's still S&P Super.
Absolutely, 6% in January, nothing to sneeze at. And let's put in perspective, every time in history the markets had to sell off, it's rallied back and made new all-time highs, and that happened across the board. The S&P, the Dow, and the Nasdaq just last Friday closed at all-time forever records.
Thanks for coming on the show.
Thank you.